Hello everyone, thank you so much for, I'm not even ready. Hello everyone, thank you so much for joining me today. For today's video, we're going to review some of the latest data from the US dealership network in regards to Ford specifically and how Tesla seems to be influencing the market very heavily as of late. Some very concerning trends for Ford. So without further ado, let's go ahead and get started right away. In case you're not familiar, this is the Ford Mustang Mach-E. It's a pure EV electric vehicle from Ford. It launched about a couple years ago. Pretty good car, very cool looking. I've been seeing it a lot around my area here around Austin. But this car right here, this Tesla Model Y, seems to be doing quite a bit of work on the Ford Mustang Mach-E as of late, and I have some data I want to share with you that's very compelling and I think paints a pretty grim picture for Ford. So let's go look into it. So just to set the baseline, Ford sold about 10,000 Mach-E's in the first quarter of 2023 globally, and about 1,000 or 2,000 F-150 Lightnings for the quarter. In contrast, Tesla sold about 250,000 Tesla Model Ys in the same period, so a significantly higher volume from Tesla than the Mach-E. However, that's not really the data that's very concerning. When you're thinking about where the sales go for Ford, Ford has to sell those cars to the dealership network. They're not allowed to sell directly, at least in the United States, whereas Tesla's sales go directly to the customers because they're not partnered with the dealership network. They're allowed to sell directly to the customer. However, the dealership data is really what's alarming here for Ford. And I have some numbers that were shared to me by CarEdge, not a sponsor, just a website that I work with very closely. And some of the numbers are quite stunning. If you look at the inventory nationwide for the Mach-E right now, it's about 6,600 cars on hand for both new and used in the US, which doesn't sound like a lot, but the demand for these cars from a customer's perspective from the dealers is what's really concerning. Per CarEdge, as of May of 2023 in the US, there's about 154 days supply in the US for the Ford Mustang Mach-E across all trims and models. What that means is that Ford stopped selling any more Mustang Mach-E to the dealership network. It would take them 154 days to clear their lots, which is basically 4 to 5 months, which is quite a long time. Dealerships want to be somewhere around the 60-day range. This is almost 3 times more than the days on hand they have right now. This is up from 124 days in April, which means that this trend is getting worse for Ford and the Ford Mustang Mach-E. So of course the question becomes why. Now at the beginning of the year, Tesla had some pretty big price decreases. Some of them were as big as 20% on some of their models, but the Tesla Model Y price decreases are definitely having an effect. And if we take the Mustang Mach-E and put it side by side with the Tesla Model Y, we can see exactly why that is and where the differences are. And I think shoppers are having a very tough time deciding to go for a Mach-E when the Tesla Model Y seems to be a much better deal. Now, Ford did lower the Mach-E prices last week by up to $3,000 on a lot of the models, and so they've gotten closer, but there's still a lot of disadvantages for the brand. And I want to do a very quick side-by-side to walk you through that. If you go to Ford's website, you can see that they've reintroduced the ability to build and order a Ford Mustang Mach-E from their website. This used to be down for the last couple of weeks as they were retooling some of their factory things, is what the company guided towards, but you can buy a Ford Mustang Mach-E directly now from Ford, even though they have a 150-day supply on the dealership network, which is an interesting move from the company. And when you take the brand new pricing from Ford, you'll see that there's a lot of disadvantages for the brand. Before we move forward, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you very much. I really appreciate your support. So here's a handy dandy chart. I have every single brand listed here from Tesla Model Y and the Ford, I'd rather say trim for the Mach-E and the Tesla Model Y. And I want to highlight 3 separate instances. You're free to pause if you want to look at the whole chart. I have some information about the cars, but here's 3 separate issues that I can see. So let's group and take the 2 cheapest cars from each brand. There's the Ford Mustang Mach-E Select rear-wheel drive and the Tesla Model Y Standard Range. These you can buy right now from Tesla and Ford's website, and they both start right around the same price after the EV tax credit. There's a federal tax credit in the US that buyers can use to get a tax credit on their cars, and after the EV tax credit, these two are right around the same. The Mach-E is at $39,200 and the Tesla Model Y is at $39,700. However, here's the differences between the cars at the same price level. The Tesla Model Y has 30 miles more range. It is 1 second faster 0 to 60, and it's an all-wheel drive car versus a rear-wheel drive car. So for the same price, the Tesla offers you these three things that the Mach-E doesn't have, which could be one of the indicators that say why Ford sales are slumping so much on the car. The second group I want to show you is the Ford Mustang Mach-E Select all-wheel drive and the Tesla Model Y long range. Again, their net price is right around the same level. The Mach-E Select is $42,245 and the Model Y long range is $42,740 after the EV tax credit. However, Tesla in this scenario, that model has 100 plus more miles than its closest competitor and 0.2 second faster 0 to 60. This is a giant difference for the same price level, and EV shoppers look at range first and foremost when they're shopping. And having this kind of a gap between the two models at the same price is going to make it, I think, very difficult for the shopper to decide that for the Mach-E over the Model Y if the range is really that important to them, which for a lot of EV buyers it is. And then the third bucket I want to look at is the Tesla Model Y performance, so basically the top level vehicles from the car, and then the Ford Mustang Mach-E GT Performance, Extended Range, All-Wheel Drive. They have very long names, these legacy automakers. And so if we look at those two models, the difference is that Tesla has 40 plus miles of range, the same 0 to 60 time, but it costs $15,000 less. So you get the same performance, 40 plus more miles, and you save $15,000 for basically the same car for both of those brands, which is obviously a huge, huge difference. However, I think the really big one here that also isn't talked about enough when it comes to Tesla's advantage over perhaps other EV makers is that Tesla has a supercharger network, which is a very vast proprietary charger network that Tesla offers, whereas Ford doesn't. Ford relies on Electrify America and whatever superchargers from Tesla they've decided to open, which is very few of them, at least in the United States. So this is a huge disadvantage. And one that I'm not even going to bring up is full self-driving for Tesla, but that's not live yet, so we're not even going to talk about that. So I think there are three main issues here that if you really think about why this is the case for Ford and why they're here, there's really three things that are not allowing them to go any further, honestly, on pricing, I believe. And I would love to hear what you have to say in the comments section below. Because the question becomes why? Why aren't they making them more price competitive? There's clearly a gap between these two models. So let me walk you through what I think is the issue. Number one, the tax credit of $7,500, which is the IRA tax credit, the federal tax credit. Tesla gets the full amount, whereas Ford can only claim $3,700 from the same exact tax credit because their batteries are not sourced from countries that the IRA gives credit to, essentially. Ford gets a lot of their raw materials from China and other non-partner countries, whereas Tesla doesn't. Tesla gets it from the US and other partner countries with the US. So they're allowed to claim the full credit on the car. So from that perspective, right from the get-go, Ford is at a disadvantage from the start. They're getting half the federal tax credit, which equals at about $3,700 from the gap perspective. The second thing is that Tesla is much farther along on economies of scale. And what economies of scale is basically your ability to push as many units as humanly possible through a fixed structure with the supply chain backing it up. So if you think of a factory that has all the machines and all the workers there, imagine how much it would cost to build one car versus 1 million cars. If you build 1 million cars with the same machinery and labor, that means you can spread all that cost out over all those people and all those machines. Whereas if you only do one car, you can only do it over one car. So the less cars you have going through that factory is a lot more costly, and the more cars you have is a lot less costly. And you can see this very, very clearly when you look at Tesla and Ford's financial statements for their electric vehicle divisions. Tesla right now makes about 11.4% operating margin, which basically means for every dollar that they sell, they make 11% profit as a whole business after all their expenses are accounted for on their total business. Whereas Ford, now that they very bravely opened the books for their EV business starting this quarter, in the first quarter of 2023, for the same exact business, Ford is making negative 102% margin operating. So for every dollar that they make, they lose $2. For every dollar that they make, they lose $2. Whereas for every dollar that Tesla makes, or rather sells, they make 11 cents. For every dollar that Ford makes, they lose 2. Okay, that's a huge difference, and that's why Ford really doesn't have any more room to go lower, right? Tesla has the room to offer lower pricing because they're making money from their business, but unfortunately Ford doesn't in this stage from their electric vehicle division. They could theoretically fund it with their profitable gas car business right now, but if that business starts to shrink, that means that Ford is kind of on their own as far as figuring out how to fund their EV operations, and I think that's why they can't go any further on pricing. And then third, and I think this one's a very underrated one, Ford has to deal with the dealership network. I dare you to find one person who actually likes shopping at a dealer. I've never had a good experience at a dealer. I'm sure if you're watching this, you've never had a good experience at a dealer. Everybody that I talk to says they hate shopping at a dealership network, and Ford has to go through that network experience with their car shopping. They have to sell it to dealers, and then they sell it to customers. Tesla doesn't have to do that. And so under this situation, can dealerships really afford to dramatically lower the pricing when we're already in a sort of slowdown when it comes to the economy, especially in the car business? A lot of reports around less cars being sold, less homes being sold. The Fed is raising the rates, which just makes it more expensive for people to be able to afford a car. So car dealerships actually afford to dramatically lower the price on those vehicles? We have yet to see. So far, that doesn't seem to be the case, given that they have 154 days on hand supply of the Ford Mach-E. And then in the same token, is Ford able to afford and to fund big enough incentives for the dealers in case they aren't able to afford it, right? If you're a dealership and you can't afford to go any lower, then Ford will have to figure out how to lower pricing on those cars somehow. I don't know how. I have no idea how this stuff works. I would love to learn more in the comment section below. But I think this is a huge problem between Ford and the dealers to figure out how to move that inventory if neither of them is willing to budge on pricing, which is obviously a big issue. A simple search that kind of gives you an idea of what's going on with the car dealership network, much broader, not just with Ford. But there seems to be something going on with the car business, not just the Mach-E, but the broader car market. I just searched for car dealership on YouTube, and the first 4 videos are the end of car dealerships is near, the problem with car dealerships, greedy dealers are in trouble, and Ford CEOs hell-bent on removing dealers. Not the most positive thing, but I encourage you to sort of go out there and do your own research when it comes to this, because I think this is a huge problem. It's a canary in the coal mine. I really believe for the legacy automakers and their inability to move product, especially around electric vehicles, especially with Tesla's latest pricing decisions around their cars. So there's some very interesting things going there, and Ford CEO is hell bent on removing dealers is a huge one as well, because they want to go direct. They've made the call where they want to go direct. So how do you think the dealership network feels when the company CEO is saying, we don't want to deal with dealerships anymore, we want to sell our EVs and our cars directly, which I think is the right call. But if you already have dealers, I wouldn't blame them if they feel a certain kind of way, right? So if Ford is trying to go direct with EVs, is now the time? You know, do we have the data sets? Do we have the things happening in the car market that could push Ford to actually move this direction? We have to see if the car market's actually going to rebound, if they're actually going to be able to sell more Mach-E's here in the coming months and quarters through more pricing. But as of right now, that doesn't seem to be the case. And hopefully it changes, because I want Ford to succeed and I want as many people as humanly possible to buy the Mach-E. But clearly it's too expensive for people to afford it. So I would love to hear what you have to say in the comment section below. Let me know what you think about this dynamic. Do you think Ford's going to be able to sell more Mach-E's? Is something else going on that I'm not thinking about? And if you want to watch more videos from me covering the auto market, electric vehicles, technology, artificial intelligence, and God knows what else comes to my head, feel free to subscribe, and I would really appreciate your support. Thank you so much. All right, everybody. Thank you so much for watching. I hope this was informative and helpful, and we'll see you on the next one. Take it easy, everybody. Bye-bye.